Welcome everyone. We are at the NYC Real Estate Expo event where I'm going to talk about inflation. So I think we're going to give everybody a few minutes to kind of log in here, but most of you are here because you feel what's happening every single day. I've got gas prices out here in California where I am, about hitting dang near $6 a gallon. Uber rides have gotten more expensive. I don't know if you guys have noticed that. So that's what we're here to talk about is inflation. And we're going to provide some solutions as well. So welcome everyone. And for those of you who are here within our community, hello to the NAP Nation, stands for Note Assistance Program. It's a company I work with. And in the chat, I have my assistant. Hey, Sangeeta. In the chat, I have my assistant, Latrice Nervous, who's going to be there filling in information to let everybody know how they can contact us more. If something strikes you during this presentation, she will have her information there, so you can reach out to her today, right? So do me a favor, wait till the end of the presentation because you don't want to miss any of the nuggets. But yeah, with that said, the other thing I'd like to talk about before we get started here is that for those of you who are interested in more about the note investing and how we do it in our community, that's our podcast right there, the Naked Notes podcast. So I will get ready to start this presentation here. I'm going to do a screen share. Once again, you are at the NYC Real Estate Expo talking about inflation. And so what I have for you is we're going to do some basic education on inflation. Then we're going to show you some examples on how we beat inflation over here. All right. Appreciate everyone who's showing up. I am on the West Coast, so it's the early afternoon here, and just capping on the early evening for you guys out there in New York. For those of you on the East Coast, which where I am originally from. So much respect to you guys. And I was just out there in October. We did our Note Lab in New York City out there at the Trip Hotel. So if you guys are interested after this, we do an event every October in New York City. My name is Jasmine Willois, and I am here to talk to you about how to beat inflation. We're going to go through and talk about a little bit of disclaimers. First disclaimer is that this is presented by the Note Assistance Program for educational purposes only. You got to exercise your own independent skill and judgment, as I know a lot of you guys have, and always trust but verify all the information that we're going to give you. But you are going to be solely responsible for the decisions you make after this. And we hope that you decide that Notes is a place and has a space in your portfolio. As always, my mom raised me to always say thank you to those who are giving, and Anthony and Julie are those people in mind. Thank you so much for having me again. I can nerd out and talk about one of my most lovely subjects, which is inflation. Not many people invite you to talk about this stuff, so I really appreciate it. But again, the NYC Network Group is just a phenomenal place for you to get involved and educated about numerous real estate investing activities, not this one right here. All right, what to expect out of this presentation? All right, guys, we're going to have a Q&A, I believe, at the end. So I will walk through this, put your questions in chat, and then what we can do is have Latrice bring me the questions, or I can read them, and we'll figure out how to do the Q&A at the end. Today, this presentation will revisit inflation. So just the basics, what is inflation? Some of us maybe, that whole definition may escape us, but we feel it, right? Then we're going to look at the current inflation environment. That's really why we're all here. What's happening right now is becoming almost traumatizing to those of us who haven't figured out how to fight, the inflation edge that's happening right now. So we're going to look at the current inflation environment. We're going to talk about what mortgage note investing is, dive really shallow into that. Not going to take too much. If you want to know more about that, again, Latrice is in the chat, and she'll tell you where to find her to get more information. We also have a free podcast. At the very top of all the slides, you're going to see a QR code. Feel free at any time to go ahead and scan that. That'll take you right to that podcast, all right? So very interactive throughout this entire presentation. Then we're going to talk about how mortgage note investing can help you hedge your inflation worries. So just so you know, if you're part of my social media, you've seen me all the time saying, oh, inflation's a bad thing, but we're really not feeling the pressures of that over here in the Note Assistance Program and at the NAP Nation. So why and how are we beating it? We're going to show you examples of vehicles and investments that we completed during the pandemic, okay? So we're not going to show you things that happened, in the past in this very environment with inflation. We're going to show you what we're doing and what we have done. And so those live examples should be very exciting for you guys to check out. And a lot of the people whose examples those are may be in the chat. So these are real people. Again, once you reach out to Latrice, join some of our free monthly meetings open to the public. You might be able to meet some of these famous noters. And lastly, we're going to host a brief discussion on how current NAP Nation members are dealing with inflation. All right. There's actually a nugget I'm going to give you at the end for one of our favorite products to fight inflation. All right. Moving forward, our podcast, as mentioned, it is an educational supplement to your note journey. So it is laid out where you start at season 1, episode 1. What is a note? All the way up to where we are now, which is season 6. And we're talking about how to safeguard your properties. We're interviewing a lot of self-directed IRA companies. And season 7, we promised to talk about 1031 exchanges. So believe it or not, another way to get into notes is a 1031 exchange, but there's only specific ones. All right. So we got to tell you about that. But let's dive right into this. What is inflation? By definition, inflation is just a reduction of your purchasing power, and it is reduced because the prices of the goods and services is increasing, right? So when we talk about goods and services, what do we think about? We think about your Uber rides. We talked about that. We think about your food, your furniture, right? Used cars. Used cars have gone up about 21% right now, just their pricing, right? And the reason for that, we'll talk about a little later, but just when you talk about goods and services, that used car is a good, and now you're paying about 21% more for that because of the current inflation environment, all right? So basically, you have two choices. You can either spend less or make more, right? When you have prices going up, you're going to spend less so you can make more. So that's what I'm going to talk about. Basic definition of inflation. It's just you guys are feeling it where everything's costing more and your dollar's going a little bit less further than it was before. Causes of inflation. We've got 3 main causes of inflation: cost push inflation, demand pull inflation, and then money supply. So money supply, I'm going to start at the bottom just because that's one of the ones that most of us know about. That's when the government goes ahead and infuses money into the system. So as of today, they've put over $13 trillion worth of money just boom, thrown into the economy to help us get through this pandemic. So what happens when you have more dollars chasing the same amount or even less amount of stuff? That's one of the things that can cause inflation. All right. So money supply is one of them. And we do see that happening right now with the federal government increasing the supply of money out there. We just had another plan that was passed. I think that one was for a couple trillion as well. So that all is what we add up to the money that they're putting out there. So taking it from the top, what is cost push inflation, right? Cost push inflation is going to become from really a majority, like I said, of the cost of things that you're dealing with. So your Uber rides, all the things that are being more expensive. And we haven't hit the ceiling yet as far as that's concerned. You're going to continue to see things and prices go up on these goods because, again, we've got a lot more money chasing a lot fewer things. And then the second thing is really where things are hitting us, and that's causing this, right? The second thing is going to be that demand pull inflation. That demand pull inflation really is around microchips, right? The fact is that you don't have enough inventory to supply the demand. So demand is outpacing what's available. So things like water, right? Things like microchips. When they don't have enough microchips for cars and watches and everything else out there, guess what happens? They start charging more for those things. So you have 3 economic reasons that you're going to see. And right now, all 3 of those things are at play. So you are seeing huge increase. As a matter of fact, our increase is somewhere around 400% more than it was during the average times, right? So pre-pandemic, above pre-pandemic numbers when you think about it. So per some of the sites that I look at, we're about 450% above pre-pandemic numbers when it comes to how much things were costing, okay? So when we think about that, let's think about how do we combat these 3 things that we now know are at play. A lot of you guys see it going down every day. So this is our current situation, right? We've got labor shortages, people not showing up to work, or if they are, they're demanding more money. So where does that fit? Again, that's going to fit in the demand side, right? They're demanding more money to get out there and work. We got those microchips, once again, on that demand side, that's helping us with the price increases, right? Hurting us, not necessarily helping us. We also are sitting in a situation where we have huge shipping and delivery bottlenecks, as you know. And so I was just in San Francisco this weekend, and I saw, goodness, I actually saw the ship sitting there just hanging out in the ocean because they couldn't dock, right? So that is causing a problem, and that's also affecting inflation, right? So that great resignation, when I circle back to the people, when you see here with the woman who's panicked, we are going through what's called the great resignation, and whether or not people want to acknowledge it or not, this is going to be something for the history books, And it's really one of the main reasons why we're feeling this. You know, the humans, we're causing a lot of these shortages, right? You remember what happened. We're running around and making a toilet paper shortage. So we're all contributing to this in some sort of way. At the end, I'll be happy to tell you where I see this going, but in the immediate short term, definitely going to see more of this, okay? Because a lot of these things are not done. We haven't figured out the bottlenecks with the shipping. We haven't found enough truck drivers to deliver, right? And so, and a lot of us are still mentally anguished over what we've gone through. So let's talk about the inflation rate itself, right? So when we talk about what we've been going through here, I already mentioned to you that we're about 450% from post-pandemic numbers, but let's talk about the actual percentage of the inflation. So there's a 4.2% jump, and that's the biggest jump since 2008 that we're having with our prices. This is some of the information you can look and find about where I'm looking to find some of the 12-month inflation rates. But what's happening right now is that we're sitting closer 5.4 or some percent for our inflation. So when you start factoring that in, you have to ask yourself, well, how am I going to combat this, right? All right. So let's talk about this. The value of $1 million, I'm sorry, $1, excuse me. If you had $1, 1990, and watched it grow to today, the dollar in 1990 is equivalent to the purchasing power of $2.12 today, okay? So that's an increase of over $1.2 over 31 years. So it seems kind of slow and creeping, but it'll catch up to you, right? The dollar has an average inflation rate of about 2.45% per year between 1990 and today. So that's producing a cumulative of 111%. Increase in the prices. So this is why we're feeling this. If you actually even just take a time zone and look back, a time warp, you would see that just in natural, even before the pandemic pressures were happening, the inflation is real, and the dollar just in general from 1990 to 2021 has suffered as far as how much value purchasing power it has. So when we talk again, 1990 inflation rate was around 5.4, and now we're looking at over 6%, 6.2%. So really what you want to know is that this is going to continue. And at some point, we have to be prepared for this because some of it's going to hold and it's not going to drop all the way back to 1990 prices, obviously, right? All right. So let's talk about what is the note, because this is what we use in this community to make sure that we are prepared for our future. So when we talk about note, it's a first position mortgage on a real estate asset. So a lot of you guys have mortgages out there, have had a property before. If you own a property, you have a mortgage. What I can tell you is that within a week, maybe a month or two, 6 months, you may get something in the mail saying, hey, please send your payments elsewhere. That is our asset of choice, okay? So your mortgage note, as you know, you have the deed in there. That's a legal document, okay? That lets you know that you have the legal right to possess it. And then there's that promissory note, which is that legal document that's letting us know that you actually owe us money, right? And so that's what we're out there buying. We're going to buy that package that includes not only your 1003 and your ATR, ability to repay, and all that paperwork that you fill out, but what we're here for is that deed and that promissory note. So we're going to go grab that stuff, and then we're going to become the new bank of whom you will send your principal and interest payments to, right? All right. So how does this work? In a nutshell, we're going to go really quick through this because obviously not able to explain note investing in 1 hour completely. But let's talk about how this works. We specifically get our inventory from banks and credit unions or corporations who have funds of which they hold notes. So believe it or not, there are a lot of corporations everywhere from LG, Qualcomm, Samsung, you name it, who actually have notes in their portfolio. And so whether it's a hedge fund, a credit union, big or small bank, at some point, these companies are poised to liquidate, and for many reasons. So first question comes to mind is, why would a bank sell either a performing note, and then why would a person buy a non-performing note? Talk to me, Jasmine. Here's what I can tell you. On our podcast, we have episodes dedicated to that specifically. So you can dive in for a whole hour on why a bank would sell a note, performing or otherwise. Today, let's talk about the process once we do get it, right? So first thing is we have to obviously source the note. A lot of you are here and you didn't even know that you can buy a mortgage. So first thing is knowing, being in the know, and then finding out where to source it and get those things. So as mentioned, we'll show you a little video after this, but we provide inventory to our members. Somewhere between 20 and 80 million a month is what they get in the trade desk, and they get to shift through it and figure out what they are what would complement, I should say, their current portfolio. After that, they're going to go and do the proper due diligence. That's what we train here through our program. Then they're going to get into the negotiations. One of the differences with this community is that we allow you to negotiate directly with the bank. So we're going to teach you how to negotiate, what the pricing looks like, budget sheet, all that good stuff. Then you're going to consummate the sale, get that purchase done. Delivery of the collateral. Nowadays, I can tell you, electronic collateral is the thing. It's hardly, a lot of the technology is taking us there as far as applications and stuff. So delivery of the collateral, sometimes it's original. More often it's going to be electronic at this point. Then we're going to board it with a servicer. So many of you guys are aware, the person that you send your payments to, it's very rare that you're selling directly to your lender. The lender has a third party who now is in charge of collecting all the payments and sending you your notices. That's our servicer. And that's what we do when we take a loan. It's called boarding. We board it with that servicer. After that, you want to go ahead and get your team together, because assuming that you found this note to be lucrative to your portfolio, now you have associated what team you're going to need to profit from this. If it's a performing note, your loan's going to settle and those monthly payments are going to come in. You're going to get the principal and interest. It's going to go to your bottom line, and service is going to send you a check on a monthly basis. A lot of us here love performing notes. We actually just sold, for those of you on social media, a $1 million portfolio of performing notes. And these gentlemen are getting close to, just say, a very handsome return, okay? Double digits return, and they're very excited about it. And what they have is over 20 years remaining of payments, right? And so that's where the stability comes in for those of us looking to retire and not wonder where our money is coming from. Because should they default, right? They've been trained to do this whole non-performing note thing, and that's the key. So let's talk about what happens if they default. They're paying, right? Typically in America, there's equity growing, right? The value of the home is going up. If things are going right, the value of the home's going up, and they're paying the principal down. So what that means is your position is even more secure, because should something happen, you have a lot of equity into it, right? In the meantime, if everything goes well, they just pay it all the way down, and then you hand them the deed, and they now have a home that they invested in, and that typically, as you see around the nation, is worth more than they purchased, right? So that's what they use to invest in themselves. If they stop making payments, what can and does happen, especially with a mortgage, is that balance will start creeping up, okay? And so any equity that's in it starts to become yours, because they now owe that to you, because their principal and interest payments are now being added, right, to the bottom line. Any tax payments that you're making, and the attorney expenses and all those things were allowed are going to be added to that bottom line, okay? And so now, instead of them owing you, for example, 50,000, maybe they owe you 60, 70,000, okay? And so that's where we can go in and negotiate at a lower price, because these things are non-performing. So once we get a non-performing note, we can either turn it into a re-performing note, talk to them, work with them, try to get them involved to make payments again, help them get through their, they may be just having a short-term financial bottleneck. Or we can go straight to a trustee sale, eviction, or sheriff sale, depending upon what the contract calls for, right? And so when I say depending upon what the contract calls for, one of the benefits and bonuses you're going to get out of this is just that. I'm going to teach you which contract we use specifically to fight inflation, all right? But for the record, there are conventional mortgages. You can find contract for deeds, also known as land contracts. And then there are such things as lease options, right? Which are just standard rentals. So those are the three types of paper that we deal with here typically. And depending upon which paper, you're gonna go to trustee sale, sheriff sale, eviction, or cancel a contract if it's vacant. After that, you're gonna record all of your, or during that, you're gonna record all of your assignments, make sure that everything's in your name. And then you will go through some sort of redemption period, which either is on the front end or on the back end as an investor, depending upon the state. So that depends on whether you're a tax deed or a tax lien state. After that, it goes REO. And that's what everyone is familiar with. Now we have a home, a brick and mortar house that we can go and do work with, right? We can now work on it because it's legally ours after we foreclose on it and taken possession of it. So that's a real estate owned asset right there. And at that point, we go through all the traditional exit strategies, which we have, you guys are very familiar with. You can wholesale it, rent it out, do another seller financing. So just as far as the process of what we go through here, it's pretty arduous. It's paper filled and requires a team. So that's part of the reason why we are get access to the profits we have. But I also must tell you, that's part of the reasons why the note investing is not for everyone. All right, I'm going to show you a quick little video about the inventory. Hopefully you can see it and hear it. We can start it here in a second. So here's what's cool about the video that I just showed you. With the Note Assistance Program, we like to say, once you join us, you're not alone any longer, right? You're part of a community and a family. So we have the notes here together. A lot of us take them down together. We even JV together. So just know that we wanted to take an opportunity to let you know that this is a community based on note investing that you can join. Let's talk about some of the examples on how we're beating inflation out here. So as I promised you, I'm going to show you some examples on how we and why we as note assistance program investors are not worried about inflation, right? So I'm going to call this my Inflation Buster series. And what you're going to see here, I'm going to see if which one of you can find out what we have in common with these things, okay? First thing, this is a asset in Taylor, Michigan. We do love investing in Michigan. And based on the return that we have, you can see why we feel confident that it's beating inflation. But let's talk about it. Purchase date was in October 2019. Okay, so we actually got them right before the pandemic hit. They made 0 payments on this one. This was a lease with an option to purchase. We ended up spending about $18,000 all in on this one. And long story short, once we started moving in for the home, because of course we got a lot of conversation about how they wanted to do this and that, but nothing was happening. So once we made a move for the home, they ended up sending a full payoff for $29,000, and that was received in December. Okay, so one thing about inflation, one of the tricks to inflation, in my opinion, if you're going to beat it, is it's hard to have your money all locked up in a place for a long time, because that's when your inflation worries start, right? So here we got our money in and out in about 12 to 14 months, right? Next one, Dayton, Ohio. So the other thing that's very exciting about this is how diverse we are, right? We are able to invest anywhere in America where the numbers make sense and the deal looks good. So that's why I love note investing, because we're not necessarily stuck to our own backyard or just inventory that we have to find ourselves. Again, in this program, you're going to get the inventory delivered to you. And these are some of the assets that people got in their inbox. All right, Dayton, Ohio, let's talk about this one. Purchase date, June of 2020. So yes, right smack dab in the middle of this pandemic, right? The annual income from this thing is about $4,260. It has the terms remaining is until 2028. So do the math on that, it's got about 6 more years on it. And the total investment for this was $15,000. The total UPB is 24. So investing under $16,000 and then getting a $4,200 in annual income, you can do the math on that. That's again another double-digit return. So holding on to this even is still, when you extrapolate, going to beat your inflation for a while. And some of you might say, well, if you hold it for 20 years, this is not a 20-year investment. So you've got 6 years. I have a feeling this is going to beat inflation if he keeps his money there still. Does that make sense? Also, what's cool about this particular note is that we got a lot of good note karma. So what's note karma? It's something we strive to have a lot here at the Note Assistance Program. And so we'd love to keep people in homes when we can. And it's just like the other one in Michigan where they got their deed back. In this one, they're able to stay and just keep making payments. The vehicle that this is in an LLC. So the NAP member who took this down is actually realizing cash flow on a monthly basis that they can reinvest into their business, right? Or into other notes. Here's a huge, huge, huge one, little amazing. And one of the most recent ones I have here to show you, inflation buster for sure. This one we purchased in January of 2021. So just this year. And when I tell you the pandemic was rocking and rolling, full flame ahead, it really was. January 2021, for those of you who remember, this was abandoned. They had been over 10 years behind, as you see. 2009 was when they last made a payment. Okay, so well over 10 years. And so we've gotten no income out of this thing. It was just abandoned and vacant. Okay, all in was about 223. Okay, so that's $223,000 is what we put all in on this thing, because it's in Newark, New Jersey. Non-performing, of course. Just recently sold it for $268,000. So this is all within a year, little bit under a year's time. But here's what's great. The investors who own this, it was a joint venture, right? They both put them into their LLC. So it's money that they're going to be able to use again. But one of them in particular has a pretty substantial amount of money in his bank account, savings account, and continuously gets annoyed when he sees his returns from this, right? When you have millions of dollars in their bank account and they're only giving you 0.3% return, it's really frustrating to see that annual income that you're getting from it. And so what he's decided to do is deploy a majority of that into these notes. This is one of which he did. And within a year, he's looking at somewhere between a 15 and 20% return when you do your math on this. That beats inflation. And now he's ready to deploy it and do it again. His other partner did a JV on this one. Same thing. He's out of San Francisco. Why do I say this? Because neither of these gentlemen had to get up and leave their house to either find the asset, to get the team to take care of all the exercises that needed to get to foreclosure, to find the realtor to sell this thing, okay, or to find a buyer, or to cash their check. And so this is where a lot of us see our future, especially when the near future, at least, when we're talking about in-person events, you know, it's going to be slim. And then more importantly, some of us are looking to do other things with our time than run from conferences to conferences looking for inventory. So this is one that we're very proud of. Happened in Newark, New Jersey. We just got it sold this month. Okay, so very excited. The money's still warm. And again, here's what's crazy about this. Newark, New Jersey, notoriously known, even without a pandemic, to be a very difficult place to foreclose on and make money on. Taxes are really expensive. So when we talk about our all-in price, we bought it for about 200 even. Another 23,000 went into this asset to go and get that money out of it. So to repeat, we're buying assets that banks and many times do not want. They don't want to deal with the borrower. And we're deciding that we will do it for the right price. Hopefully that makes sense. All right. I think this is one of the last ones coming up. We have Bastrop, Louisiana. Another tribute to our diversification, right? So you've seen this in Ohio, Michigan, New Jersey. And so we actually just bought something in New York, in Brooklyn. For those of you who are out there, we just bought a note in Brooklyn. That one costs a pretty penny, above $350,000. So as you notice, we've got notes where people are purchasing everywhere from 12, 13,000 all the way up the board, right? So you can buy notes on commercial properties as well. Let's talk about how we made money in Bastrop, Louisiana. Louisiana is actually some of our members' favorite place to invest in, right? A lot of pride of ownership there, and just people just love the state and don't see themselves living anywhere else. So purchase date, December 2020. The entire time that we had the note, didn't collect much income. It can happen. It was a non-performing note. It was actually a lease option with an option to purchase, in which they had expired. So when it was all said and done, they were all in 18,000. And after executing the proper notices, they came to the table with a full payoff so they can keep their home and get the deed to the tune of $30,671. These are the things, as you can see, when you see these type of returns, they are well above what your financial advisor is talking about when you talk about investing in REITs, or when you talk about buying individual stocks. Now, if you want to compare it to Bitcoin, It's not a Bitcoin thing. So I want to be very clear about this. And a part of that is because the risks are very, 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 very small compared to what you're doing with Bitcoin. So you have to decide where you are. And a lot of people just have diversification because, again, that's how you really fight inflation, by being diversified in inflation beating assets. All right. So this one was one in Bastrop, Louisiana. Last one I want to show you guys is a pool of notes. Okay. So let's talk about this pool of notes. And this is really going to lead me into my nugget for you guys. Okay. My nugget, which is, how do you really beat inflation, Jasmine? Part of the problem is that I can go out and buy a portfolio that's going to pay me the same amount for 30, 40 years. But that same amount you just told me is going to be worth less. And the purchasing power, that's going to be less. So 30 years from now, we're not going to be as excited about that payment. Touche. Okay. So one of the things that we capitalize on, and what you're looking at here, is an entire portfolio of what we like to buy, which is lease options. Okay. And so what we have here is a person who purchased in May of 2021, annual income of almost $40,000. So let's recap. He went out and purchased himself a part-time job that he didn't have to show up to. Okay. Going to get, some good $40,000 a month in income without having to go to and ask, do you want fries with that? Okay. Monthly income's about $3,300. All in, he spent $234,000. So if you are sitting with that amount of money in a self-directed IRA, imagine that money coming in and being tax deferred. These are some of the things that we're doing over here when we talk about beating inflation. The UPB on this was about $360,000, making the cash on cash well above 15, and the value of this portfolio was about 1.1. As you can see, very, very diversified. We've got Iowa, Michigan, Indiana, California, North Carolina, and Nevada. So some solid assets in there, right? For you to feel comfortable with. So we have diversification within states, within products, and within returns, right? So let's talk about some advice. You're going to try not, if you want to beat inflation, here's some advice. What I would say to you is try not to lock money up for more than 5 years. That's something we do here, right? Because if you can get your principal back, or if you can get your money back somehow within that 5-year period, then you can redeploy it at the current rates. And that's how, in my opinion, you're going to beat inflation, especially if you have a portfolio where you're holding everything for a long time. Second, you're going to hold assets that are fairly liquid, right? This biggest concern comes when people hold bonds, right? If you have a 30-year bond, especially depending on which way the rates are going, it may not be as liquid as you want it to be. One thing I can tell you about the products that we use is that they're fairly liquid, whether we can sell them in the secondary market, right? They can go pretty quickly, or they have what we like to take advantage of, which is expiration periods, okay? That's the first hint. So the next thing I'm gonna tell you is that you want to have a fair amount of liquidity, right? So maybe do not spend all your money. Always leave some money to deploy as we go forward, so that you can start taking advantage of some of the rates that are out there. Instead of locking all your money up into one rate, deploy a portion of it this quarter, portion of it this quarter. And as you get it back, you deploy. So you're constantly deploying and capturing some of the more recent rates that are out there for you to stay above inflation, right? All right. The other thing, borrow. While borrowing is inexpensive and rates are low, that's another tool that people are using to go ahead and combat inflation and take advantage of what's going on right now, right? So with all the money that's been thrown into the system, that's keeping the rates low. And so now we're going to have some inexpensive money to borrow that you can deploy. All right. And lastly, I'm going to tell you is diversify with alternative investments. So not only here with notes, but we've got oil and mineral rights. For those of you who are interested, I sit on the board of a company that does a fund for oil and mineral rights. So those things are definitely competitive when it comes to beating inflation. And if you're looking down at that little asterisk down there, you can buy tips, right? Treasuries. So I just want to put that out there. There are quite a few products that you can buy to it, but tips, and they have something that's called insurance inflation protection, right? So what happens is you have an automatic increase, which is just a rider, really. So there are certain products out there because a lot of us are concerned about this, and it's not just something that we're worried about during a pandemic, if that makes sense. As we wrap this up, this is my big nugget to you, all right? First thing I want to tell you is that, as we already know, inflation rises, so do the value of homes. So that's very good for note investors. Okay, equity gives us an opportunity to capitalize and actually maybe profit more from our assets, especially if they are vacant, right? It's going to cost us a little more, but it may be worth it because we've got the value rising. So when inflation rises, so does the value of homes. When the values of home rise, so does the equity. So that's equity for us. We can take advantage of it. And when equity increases, that the safety of our investment increases, right? So if you had $100,000 invested in a home in California and it was worth 200 when you purchased it, you're like, no worries, no big deal. They stop paying. I have $200,000 house that I can, use to compensate me for my troubles. Next thing you know, it's 2021. Now that house is worth 300,000. You're even less concerned about your $100,000, which is now probably 70,000, right? And you're sitting on a $300,000 home. So your safety increases as far as whether you can sleep or not. This is not the stock market where someone gets up and now your investment can drop to the ground. Okay, your safety is going to increase when that equity increases. All right, so when we talked about this, payments staying the same, that's one of your biggest concerns, right? But you have a higher chance right now in this environment of getting a payoff or a refi. So that's one of the things that we take advantage of here. When we're dealing with mortgages and contract for deeds, one of the things that we're excited about is that we can pretty much with some proper math determine which ones have a higher chance of doing a payoff or a refi. So when you look at notes that have pretty low balances, we've got some with $35,000 balances, but now out in Wisconsin, the homes are worth $150,000. Before they let you foreclose on them, someone's going to give them a refi. Somebody's going to come up with the $20,000 to save the home, right? And so a full payoff is more likely through one of those vehicles. And so that's great because, again, talking about keeping your money for less than 5 years, getting it back, and then deploying it, right? So that's how you're going to have to work on defeating inflation, is always having some money to reinvest and deploy to capture the ongoing rates. So you're not stuck in 1990 rates, 2021 rates, into 2030, 2035, okay? So let's focus on, what do we focus on here? Ding, 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 lease options. So 90% of the investors out there do not know how to purchase lease options, how to buy them. That is one of our biggest specialties, techniques, tricks, and secret sauces here at the Note Assistance Program. We love lease options. A lot of our members right now are even upset that I'm talking about this right now because it's not a crowded space. What I can tell you is this: if you look for lease options that have expirations that are 3 to 5 years out, that's going to be your ticket. A lot of my members have understood that, and now they're out specifically looking for lease options. And that, I can tell you, as more people get educated, will become a more crowded market. But right now, it's wide open, right? So lease options, what are those? It's a lease with an option to purchase. So the person is technically still a renter, all right? So there's a lot of benefits that come with that. Too much for this podcast right here, as I need to wrap up and make sure we take Q&A coming up on our expiration of time. But again, what I want you to leave here with, if anything, is what is inflation? Have a better understanding of what inflation is and how it affects you. Better inflation idea of what inflation we're going through right now, right? And what are the 3 things that economists contribute inflation to? That's very important. Once you understand it, then you may not panic as much, right? If you realize that a lot of this has to do with demand pull and cost push, then you may think to yourself, as I do, prices are going to level off eventually. That's really what I think, okay? And so, in my opinion, we will be going through this for the immediate future. But as workers come back to work and the Great Resignation is over, right? As microchips start getting back into cars, that's going to come down. So things like that are going to bring us back to a little bit of normality, but we will never get back to where we were before because that's just inflation. For those of you who don't know, for our members, I always like to talk about, as we mentioned earlier with Anthony and Julie, always in good company of people who like to give, not just give back our time and education, but if you are part of our community and you buy a note, one note gets delivered to you and another one gets donated to a local homeless shelter, right? So again, everything we do here is to be interactive and make sure that we are helping the people around us because they are part of our success as well. I really appreciate your time. Let's take some questions. Last one to leave you with on Naked Notes podcast. So that's when you can hear much more about our strategy, our idea, our mindset, and our community. Thank you.
All right. Hey, I have one question for you.
Yes, ma'am.
It was earlier on in the presentation. How does this increased inflation tie to the housing market?
Okay, I think we put that here in the slideshow. I'm going to go right back. You see this? Does this not answer your question? Go ahead and chat and let me know if you need me to go through this again. Inflation typically is going to have the value of homes rise. That's what I wanted to have here. Is this what you're asking?
Yes, looks like that answered it.
Okay. So this is really one of the ways that we benefit as note investors from this silent thing. So when everyone else is yelling about inflation, we typically, not only are we not concerned, but we're like, yeah, let's have some inflation. Serve it up with a side of cherry pie. Just kidding. All right, any other questions?
I didn't have any more that I got during the presentation, so anyone is free to just throw one up in the chat.
All right, while I'm checking that out, and before we wrap this up, then here is what we call our path of education. If you're looking at this and you're like, I want to learn more, depending on your personality, no matter how you want to jump in and how aggressive you are, it is the end of the year. It's time for people to start planning for 2022 and figure out what and where they want to see themselves, right? This pandemic is giving a lot of us a lot to think about and where we see ourselves. So we are helping create you as an investor and as an individual and as a professional. We have a free podcast, as mentioned, that's free. Check it out to get you warmed up. We have 2-day training workshops. I teach 4 times a year. New York in October, twice in Los Angeles, and then once in Houston. All right. So you can come out and catch us there. Latrice will have more information on how that works, how to sign up. Everything there is on Eventbrite with the pricing. Third, we have what's called our online self-instructed training. You're going to find that online. It'll walk you through our entire proprietary process of how to profit from a non-performing note. It's huge. And it's really for those of you who may not have time to do the hands-on one-on-one training with our esteemed trainer, Harrison, who walks you through a note. So the hands-on training is where we walk you through a note and just hold your hand, basically. We're available to answer your questions. You do phase 1, 2, and 3 training, and phase 2 and phase 3 are really as you have a note. So we walk you through the note until you profit. Lastly, we have a buyers club for those of you who may not need the education, but definitely need the inventory. All right, looks like we got another question, or?
Yeah, how does noting work in deflationary times?
A whole nother podcast.
Yeah.
Don't have time to answer that here, but what I can tell you is that it's not a bad environment for us either. I can tell you that. And it's very rare that we see any deflation in this economy. It's usually short-lived, but we pretty much make good on both of those. So we can definitely have another one on that if Anthony will have us back.
Very informative, like always. I just want to let everybody also know there's also a lot of people viewing through LinkedIn as well, that Jasmine will also have everybody's email by tomorrow, and she will be putting out a notice to everybody to thank everybody for attending and coming on board. And you can continue asking questions. You can ask her questions, especially for the ones that are not on right now live. I know several of my clients have tried out Jasmine, and they have put in some great recommendations, and I love working with her. And we're all looking forward to promoting Jasmine more, because she's been out there and she's been doing this, and she's a real veteran at it, and she's got great reviews. So we're very excited to have her on. I'm so happy that she did come on board, and we're going to be promoting her for the next 6 months on marketing Naked Notes. I think it's a great idea. It's interesting. It's another tool for income source right now. Jasmine, I really want to thank you. And again, everybody will receive a thank you note from Jasmine, and you'll be speaking with her. You could constantly always submit your questions from here on in forever with Jasmine. She's a great presenter. We had her in April, and we really enjoy having her back. Thank you, Jasmine.
My pleasure. Thank you, guys. Look forward to meeting everyone.
Everybody take care. Bye-bye, guys.